Hey everybody, Jason Sherman here. In today's episode of Zero to CEO, I sit down with visionary DeFi innovator Martin Froehler. Welcome to the show.
Thanks for having me. Welcome, thank you. Thanks for having me.
No problem. And today we're going to be talking about how you are disrupting Wall Street, right, and the trading market in general. Before we jump into what Morpher does, I'd like to talk about the issue with traditional finance. Right, there's a lot of gatekeeping, high fees, and geographic restrictions. Let's talk about the problem first.
Yeah, sure. So as you mentioned already, the financial industry consists almost entirely of middlemen. So if you are in the fortunate situation that you have some money that you would like to invest, then obviously you need a bank first that safeguards and keeps your money for you. Then you have to find a broker that lets you trade on an exchange, where you then maybe purchase a certificate, an ETF that's issued by yet another company. So at the end of the day, you are dependent on 3 to 4 middlemen standing between you as the investor and the product that you ultimately want to get. And all these middlemen add friction, they add costs, and actually they don't provide an excellent service that would be worth it to pay them.
Yeah, they're earning fees. They're like charging you for all these different things that you can literally do by yourself. I think it's crazy. And, one of the things we're going to be talking about a lot is the blockchain and how blockchain technology is, so amazing. But one of the things that I don't think people realize, they hear blockchain and they roll their eyes like, oh, great, blockchain, crypto again. But it enables zero fee trading basically, right? So, let's talk a little bit about what the technology behind blockchain is and how it does offer a better trading experience.
Blockchain is just a decentralized and public ledger. So there is no magic to it so far. But blockchain excels at one thing, and that is replacing trust that has to be placed in middlemen or in counterparties with cryptography. So essentially, that is whatever blockchain application you look at, that is at its core. So you don't need third parties anymore. That's also at the core of Bitcoin, the first blockchain, basically. You don't need a third party anymore that validates your transaction. You can do a peer-to-peer transaction, right? So that's at the core of blockchain technology. And we have taken...
And people always, before you continue, you mentioned peer-to-peer transactions, right? And most people don't understand what that means. And, I try to explain, well, let's say, you have a computer in your house or a mining rig, and they say, well, what is that? And I'm like, well, it solves these complicated algorithms and it creates the transactions and, creates Bitcoin, basically. It basically does the transactions for you. But there are millions of these computers all around the world. No one person or one government or one country owns them all. Of course, there's a lot of centralized, warehouses with them. But let's talk a little bit about the background behind what is processing the transactions.
As you mentioned, it's peer-to-peer. That means you do not depend on any one actor or a centralized party to send someone else a digital good. In the case of Bitcoin, it's like something that has monetary value. So it is money, essentially. So I can send you money, you can send me money without having to go through an intermediary. So that is what blockchain does. And as you mentioned also, in the case of Bitcoin, the transactions are validated by a network of miners. So these are also, anyone can become a miner, hypothetically. So anyone is invited to join the network. And these miners compete for adding a block to the blockchain. And the most successful miner, and this is like a math puzzle that they solve. It's like, you can think of it as a very difficult lottery at the end of the day. And one of the miners is the lucky miner that solves or wins this lottery, and then is allowed to add a block to the blockchain. And this block contains then a transaction, maybe a transaction from me to you, right? I've just sent you money, and the miner validated it.
Yeah, it could be. And that's the best part about it, right? Is that the transactions are public, so you can actually see which wallet is sending it, which wallet is receiving it. And let's not forget something here. The big elephant in the room is the fact that if I want to go to the bank and get money to send to someone in Europe, I have to wait until banking hours. So if I want to go to the bank at like 7 p.m., I can't. If I want to go to the bank on the weekend, very limited hours. I mean, if I want to trade stocks, it closes at 4 p.m. or whatever, If I want to trade stocks on the weekend, I can't. And like, it's very frustrating, right?
Yes.
It's almost like they control your money and they control everything about you. And blockchain and crypto in general, it just opens it up to the world 24/7, no restrictions. So is this where kind of Morpher came into the picture, where you said, well, we have this amazing technology, but we need to enable people and educate people on how to use it? Was that kind of one of the
Yeah, what
things
really
that
started
started it
Morpher
all?
was essentially I'm very driven. My co-founder and I are both very driven by creating equality of opportunity. We have seen that a lot of people actually don't have access to financial markets. So we in the US and in Europe and in first world democracies, essentially, we are in the fortunate situation that we have access to the stock market. We can open a broker account, we can buy a stock if we want to participate in the financial markets. But for 70 to 80% of the global population, that is simply not true. So they can only dream of ever buying a Tesla stock
Yeah.
or anything like that, or an ETF, yeah, a gold ETF or something like that. So they're basically locked out systematically out of the financial system, and thus they don't have the same chances that we have in the West to build and preserve wealth. And
So was that your vision for the future for financial freedom and inclusion, was to kind of open up a path to people to be able to do this? And what were your challenges when you started to
Yeah,
realize that
so
you wanted to build
that was
this?
exactly what drove us to build Morpher initially. So to create an equal playing field and to empower millions, if not billions, of people to participate in the financial markets for the first time. Um, there were a lot of challenges, obviously, and there still are. Yeah. So a
Can
blockchain is
imagine.
like bleeding edge tech. That means that when we started, a lot of the stuff that is around now just hasn't been around. So we had to build a lot of infrastructure ourselves
Right.
first before we could go to the market. That's one thing. And every component of infrastructure that you build is supposed to operate on decentralized networks, meaning it needs to be built in a way that it is like really, really robust. There mustn't be any bugs because otherwise the whole
Yeah.
system could be exploited. So it's like, yeah, exactly, security issues. So
Security
that's
issues.
on
Yeah.
the technical side, certain challenges. I think we did pretty well at solving them, at overcoming them. So the product today is like really smooth and simple to use. I believe simpler even than any broker that you would otherwise want to use. Um, so we abstract. Mhm.
Well, let's talk for a second. You were a broker, right?
Yes,
You
correct. So
worked
I
at a hedge fund at one point.
Morpher is actually my second startup. My first startup was a decentralized quantitative hedge fund. Again, motivated by creating equal opportunities. In this case, but for quants, so for people
Hmm.
who write quantitative trading algorithms that would then trade the markets autonomously based on maths, on statistics, essentially. And
So was there a
no,
pivot there? Like, was there
no, no,
a
those are
moment when you
two very
realized,
separate
well, there's two
companies that I've
separate
worked on, and
products?
both are around. Yeah, so QuantTX is also still around. But
Okay.
yeah,
Interesting. So
correct.
it's
But
almost like a
QuantTX solves
vertical
only a very
almost.
niche problem, right? So it's also a problem for people who are very well versed in computer science and in maths, who can create these algorithms and then get access
Right.
to the markets or to investors that way.
Where's the moment, this is entrepreneurship 101 really. Where
Mm.
when you have the idea for these products and these platforms, when is the moment that you realize that you have something that can be built for the masses? Is there a moment that you realize it? And
Yeah,
if
so
so, what
basically,
is
it's
that?
always
How does
born
that
out
come
of
to
an
you?
inefficiency in the markets, and then there is the solution to the inefficiency, and that comes to you by just thinking about how could you tackle this, how could you solve this, right? So in the case of QuantTX, the inefficiency was I was a quant in the industry myself, and I was tasked with hiring, recruiting, and training new quants, and I had a lot of applicants in the industry. So I had like 100 applicants per quant role that I filled at the end of the day. So there are an order or two orders of magnitude more people out there who want to become quants, who could potentially become quants, but end up in other industries at the end of the day. And that's a huge waste of talent. Yeah, they are then at the end of the day working at insurance companies or at banks or
Mm,
whatever. It might be a fulfilling job. No question there. But still, it's not
sure.
correct. Yeah,
It's
it
not
might
their
not be the
passion.
best.
It's
Yeah,
not their passion. It's not what they truly want to
yeah.
do. So you found the gap
Correct.
in
And
the
then,
market
then
for
the
for
idea
that
was,
product,
how could
basically.
we
That
solve
makes
this? We
sense.
cannot hire hundreds of quants for every quant role that we have open here at the company, but we can empower them. We can give them the tools to work as quants as freelancers. And those who are
Yes.
successful, we connect them with capital of institutional investors so that they become freelance quants. And
Nice.
during that journey at QuantTX,
Very
I
cool.
also realized that actually there's a much bigger problem underneath it all. These quants, they might build great trading algorithms, but they cannot even trade it themselves because when they build trading algorithms on the futures
Right.
markets, it takes like really deep pockets to trade futures. Futures contracts often have notional
Right.
contract values in the hundreds of thousands of dollars. So typically they were priced out of the markets that their very own trading systems, their algorithms operated on. And that made me realize that,
So is that
yeah, exactly.
is that when you had the idea for Morpher, you realized that
Exactly.
you could kind of open it up to a smaller amount? Is that the difference between because one of the things I want to ask is, and I'm sure people are wondering, is how is Morpher different than all the
Yep.
other trading platforms out there?
Morpher
Because
is
there's so
like
many
really
of
a
them.
paradigm shift because it is actually not a trading platform. It just has the same functionality from a user's perspective, but there is actually no trading the underlying. So what we
Okay.
did with Morpher is we took
Interesting.
the concept of eliminating the middleman, replacing them with cryptography, and took that to exchange trading, essentially to brokers and exchange trading. And with Morpher, we just replicate, we create virtual copies of real world assets on the blockchain. So we create a virtual copy of Apple, of gold, of Bitcoin, of all kinds of assets. We have around 1,000 assets on the platform, and there is like really no limitation of the kind of asset that we can have. We have everything from stocks to forex to even luxury collectibles like Rolex watches and sneakers that you can invest in on the platform.
Hmm.
And the way this works is essentially we have
Cool.
a smart contract that observes the prices of all the assets that we have available on the platform in real time. And our users bet with the protocols native cryptocurrency with the Morpher token on the price development of these markets. So if you want to say invest on Morpher or bet on Morpher on the Apple stock, you just buy 100 Morpher token from a crypto exchange or also directly from us. You invest these Morpher token in the Apple stock. So you place a bet with the smart contract that you have bet 100 Morpher token on the price of the Apple
Okay.
stock. And then the smart contract simply observes the price of Apple. And if Apple gains 10% and you want to close your trade again, you end up with 110 Morpher token. And the protocol just creates the 10 token that you have made with your correct bet. So essentially,
And is
no, a token is
is
not
a
worth
token worth
$1.
$1?
The token price itself is free floating. No, it's
It's
not a
not.
stable coin.
It's not a
It's
stable
currently
coin. It's not a stable coin. So what happens if you sell your 110, Apple, and you get your 110, but then it's worth less
correct. Yeah,
than
so that is
100 when you first
that is
bought it?
indeed possible. So the way Morpher works is essentially that you bet against the collective bets of everyone else indirectly. Because let's assume that the market capitalization of the token is constant, right? There are 100 million token, and say the market capitalization is 100 million. So in that case, a token would be $1 each. Yeah, and now you made your bet on Apple, and you gained 10% with it. Everyone else on the platform made in the meantime 5% on average. That means that you outperformed everyone else by 5%. So with a constant market capitalization, you now get to redeem, say, a real purchasing power profit of 5% because you're better, 5% better than everyone else. And that is exactly
Got
also
it.
equivalent to how it works in traditional financial markets, only that nobody realizes it. Because also in the stock market, if you don't make at least the
Right.
inflation rate, you're actually losing money in purchasing power equivalent. You might win money in dollar terms, but you need
Right.
to
The
actually
dollar value.
outperform the inflation rate. And in our case, in Morpho's case, the inflation rate is not something that's determined outside of the economy, but inside the economy. So it's the collective trading success of everyone else.
Makes a lot of sense. Definitely sounds innovative. If you guys want to check it out, I'm assuming they go to morpher.com, morpher.com. Are any special discounts or anything you can offer the audience
so
while
everyone,
you're here?
gets an airdrop at the moment, a free airdrop. And if you,
Oh, nice.
we're also about to launch a referral program. So in a few days from now, you will get chips on the house, so to say. But maybe the best idea is that
Nice.
anyone who joins here, just send me a quick email to martin@morpher.com, and I'm happy to fund your account and to assist you with onboarding.
Awesome. Guys, you heard it. Airdrops, free tokens. Go to morpher.com, talk to Martin, try it out, trade
There's no restrictions.
endlessly, right? There's no restrictions. I love it. Thanks for. Hope you guys enjoyed the episode, and we'll see you in the next one.